You are watching Market Watch, the brief overview of the key events from the world of finance. Gold continues to grow. The rapid increase in the number of victims of the military conflict in the Middle East, as well as the risk of its expansion, continues to increase the demand for gold. In addition to the risk premium, it is necessary to take into account the breakthrough of the technical resistance level at $1,935 per ounce. Even during the U.S. trading session on Wednesday, the psychological resistance level of $1,950 was tested. But a more significant obstacle in the way of buyers is the mark of $1,985 per ounce. To overcome all these barriers, the market needs a sufficiently strong bullish fundamental factor, which could be the same conflict. U.S. government bond yields. It is noteworthy that gold manages to grow even despite the steady growth in the yield of U.S. government bonds. Recall that it was the increase in the yield of this debt instrument that contributed to the sales in the precious metals market. This only indicates that investors are seriously concerned about the global geopolitical situation. And on the opposite side of the scale is the stock market, which on Wednesday turned bright red, completely losing all the profits received since the beginning of the week. The collapse of key stock indexes also indicates a decrease in interest and risk. U.S. oil inventories. And now let's move on to the oil market, which is caught between the devil and the deep blue sea. On the one hand, investors received an additional signal for purchases in the form of an aggravation of the conflict in the Middle East, as well as a significant reduction in oil reserves. On the other hand, the general deterioration of the economic situation, the slowdown in business activity, and mass sales on the stock market make investments in a risky asset extremely unattractive. Most likely, it is for this reason that we did not observe a significant increase or decrease in the price of black gold, as, for example, in the stock market. Cryptocurrencies, a phase of uncertainty. A very similar situation is developed in the cryptocurrency market. The increase in uncertainty, and as a result, the sell-off in the U.S. stock market stimulate to the flow of part of the capital into cryptocurrencies. But the conflict in the Middle East has once again highlighted the dark side of digital assets, after it became known that the militants behind the attack on Israel received large sums in cryptocurrency as financing. The reaction to this information was followed by a letter from U.S. lawmakers to the White House and Treasury with a request to provide a plan and prevent the use of cryptocurrencies for terrorist financing. In fact, we are talking about another tightening in relation to the cryptocurrency market, which significantly reduces the likelihood of approval of applications for the creation of Bitcoin ETFs in the short term. But once again, we recall that the cryptocurrency market has received one very strong fundamental factor, which is bullish for one group of investors and bearish for another, thereby increasing the uncertainty. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.